We've been doing it all wrong, trading our cryptocurrency on large, centralized exchanges. Exchanges that care about nothing other than that juicy bottom line. I mean, cryptocurrency is all about financial control, right? Then why the hell do we rely on these centralized entities to exchange tokens for us? There has to be a better way. Well, there is, and it's a DEX called Uniswap. My name is Guy, and in this video I'll give you everything that you need to know about Uniswap. I will be covering what Uniswap is, how to swap your tokens, how to earn steady returns through pooled liquidity, and some personal tips you could use to bank some DeFi arbitrage. So be sure to stick around till the very end if you want those nuggets of wisdom. Before I get started, there are a few quick things I need to get out of the way. I am just a random guy, literally, on the internet that gives my opinion on really important crypto-related stuff, which is another way of saying that I am not a financial advisor. And if this is your first time at the Bureau, welcome to my humble abode. I do handy tutorials like this regularly, so if you want to see more, just hit up that subscribe button and turn on those notifications. Get these the moment they leave my crypto kitchen. All set? Great. Let's get on top of Uniswap. So what is Uniswap? Put simply, it is a decentralized application, or dApp, that facilitates the on-chain exchange of ERC20 tokens. It's more colloquially known as a decentralized exchange, or a DEX. Through the use of smart contract technology and a super simple user interface, users can connect to Uniswap with popular Web 3.0 wallets like Metamask. The main thing to note about Uniswap is that you remain in control of your assets the entire time. You control your keys and you do not have to rely on another third party to operate with honesty when facilitating a transaction. It was launched back in late 2018 with no ICO. That's right, you don't need one of those to build an amazing product. This means that it does not have its own ERC20 token and instead uses ETH. Direct ERC20 token swaps are routed through ETH, which means that there is ample liquidity. It's of course fully open source, which means that you can independently verify the robustness of the code. In April of last year, they did raise some seed funding from Paradigm Ventures in order to further develop their product. Since then, Uniswap has seen an explosion in trading activity and volumes. Indeed, they're not alone, as a number of other decentralized finance, DeFi applications have seen similar growth. Let's hop on over to DeFi Pulse and take a look at those rankings. Looking at total amount locked in the protocol, Uniswap comes in 6th compared to all other dApps. If we were to compare it to the other DEXs, it has over 4 times the amount locked up than its nearest competitor. So it's quite clear that Uniswap is a go-to favorite for on-chain liquidity. And Uniswap just recently released version 2 of their protocol. This has a number of exciting features and improvements over the first iteration of the platform. I'll take a look at these in a bit. Anyways, I wanted to start this with a bit of a walkthrough of the Uniswap user interface. So let's jump right in. The first thing that you'll notice when looking at this platform is just how damn simplistic it is. No order books, no complicated order forms. Just 3 simple functions to switch between: swap, send, and pool. Don't worry if that light pink color scheme is not to your liking. You can easily toggle over to the dark UI if you want, right down here. For the rest of this video, I am deciding to move over to the dark side. Sorry, Yoda. Anyways, as mentioned, this is a Web 3.0 dApp, which means that you will have to connect it with one of the following wallets. I'm using a Metamask, so I'll click on that. If you already have your Metamask installed, then it will ask you to sign in. Once that is done, you're successfully connected to the Uniswap platform. Your wallet will use the Uniswap smart contracts in order to interact with the Ethereum network and confirm the operations. Let's take a look at that swap feature, shall we? Here I will enter the amount of asset that I would like to swap, and here I will select the asset that I will be swapping to. Theoretically, you can swap any ERC20 token that you want. If the token that you want to swap is not there, then you can actually import it. Yet you'll probably only want to trade those that give a reasonable level of liquidity. Oh, and while we're on this point about liquidity, I need to explain some of the dynamics of pricing at Uniswap. Unlike when exchanging crypto through other avenues, the price that is quoted is only an estimate. It is indeed possible that you could receive less of the asset that you're exchanging. So why is this? Well, it comes down to three things: liquidity provider fees, slippage, and price impact. With regards to the first one, you have to pay those liquidity providers and incentivize them. So you'll be charged a 0.3% fee on all of these swaps. It's important to note though that Uniswap itself does not charge any fees at all. Pretty cool, right? Anyways, for price slippage, this is the amount by which the price will change between the placing of your order and it being executed. You can set a max slippage limit here, and this will impact on the final amount that you're likely to get. Finally, that price impact is a bit more of a tricky one. This is the amount by which your exact order is likely to move on that price. It's dependent on the size of the liquidity pool. So, for example, if I want to exchange Ethereum for highly liquid DAI, then there is likely to be very little impact. However, if I want to swap my ETH for the donut token, I'm likely to get up to 15% slippage. Sorry, Homer. Oh, indeed. Anyways, one last thing that you have control over is the amount of time that you would like this trade to remain open. That is the deadline number here. If the trade has not completed in this time, then it will revert. Okay, now that we have an overview of how the swaps will work here, let's place our first swap trade. I'm going to swap some of my DGX, which I bought recently, for some DAI. Taking a look at the parameters, I should get about 53.3 DAI. Of course, there is likely to be price impact of close to 4% on this trade. There will also be this fee that I have to pay the liquidity providers. Think that a reasonable slippage here is about 0.5%. You can set a custom amount if you want. Also, going to set a deadline of 20 minutes for this trade to complete. If you check down here, you'll see the route that the trade will take. It will first be converted into Ethereum and then into DAI. Anyways, once that is all clear, I can hit the approve button and this will then pull up my Metamask confirmation window over here. If all is well with the transaction, I will hit confirm and the transaction will start confirming. All of this will be done on-chain and converted without any more intervention from yourself. If there is slippage in the price, then it will not be above your chosen tolerance. Also, if this is not completed in 20 minutes, then the transaction will revert. Okay, so that's the swap functionality. Another feature that Uniswap has is the ability to send another addressor token, having it being swapped from what you currently hold. This could be a great feature if you need to pay someone else in a token you don't hold. So, in this case, I hold ETH, and I want to send someone else some wrapped Bitcoin. Just like is the case with the swap, I will have the same functionality around the order. This includes things such as the slippage tolerance that I'm willing to accept, as well as how long I would like this trade to remain open. Once that's all confirmed, we're ready to go. Hit send and confirm the transaction on your wallet. And this then brings us on to the pool feature. Liquidity pools are what makes Uniswap decentralized, and they're also the mechanism through which you can make a profit with Uniswap. They're essentially pools of tokens that sit in smart contracts. This means there are tokens available on Uniswap to enable a user to swap the token they hold for the one they want. After all, there is another side to every trade, and the liquidity pools are simply the other side of that trade. For example, you can see the ETH and DAI liquidity pool over here on Uniswap, and that the current pool size is about 2,800 ETH and 566,000 DAI. These pools are made up of an equal value of Ethereum and the ERC20 token being traded. This means that each ERC20 token traded on Uniswap has its own liquidity pool. Uniswap is pretty unique as the protocol enables anyone to provide liquidity to that pool. They are crowdsourcing that liquidity. If you contribute liquidity to a pool, you will hold a certain percentage share of the entire pool. Whenever anyone trades a trading pair on Uniswap, the trader pays a 0.3% fee, and that fee is essentially distributed proportionately amongst liquidity providers. The goal of this mechanism is to increase the amount of liquidity on the Uniswap protocol. The more that there is, the more likely orders are likely to go through without a lot of slippage. Oh yes, another cool thing about this feature is that anyone can create a new exchange or liquidity pool for any ERC20 token. That means that there are no listing fees for projects at all. Anyways, let's look at joining a pool, shall we? The way Uniswap liquidity pools work is that you need to deposit an equal dollar value of both tokens you want to get involved with. So, if I want to get into the DAI liquidity pool, I need to have the equivalent dollar amount of both DAI and ETH to supply to the liquidity pool at the same time. In this case, I want to provide liquidity for a stablecoin and ETH. The ETH USDC pool is already quite large, so let me try the ETH PAX pool. As you can see here, I'll need about 206 PAX and 1 ETH, the same dollar value. As you can see here, that is 12% of the pool. Every time someone makes an exchange in the ETH PAX pool, they'll get a proportional share of the 0.3% fee that is charged on that. Anyways, if all is okay on the pool function, I hit Approve PAX and it will pull up my Metamask confirmation. Let me hit Confirm and the transaction will move into the pending stage. Once that's done, I have successfully unlocked my PAX wallet so that it's ready to start pooling. I'll then hit the Supply button. This will pull up a confirmation screen where I will need to confirm this supply. Then one more confirmation from my Metamask and we should be good. It may take a bit of time to confirm, but once it has, you can be fully confirmed. And bada bing, bada boom, you are now providing liquidity. Here is information on my share in the ETH PAX liquidity pool. If I click on the pool details, that will take me to the complete overview over there at Uniswap. Something that's important to note here though is that the amount of PAX and ETH that I have in this pool will not remain constant. As swaps are facilitated in the pool, my share will be updated to reflect that. So just take a note of that when placing in a pool. Of course, it's not just about providing liquidity to any old pool and hoping to earn some returns. You also have to have a bit of a strategy when it comes to picking these pools. You'll only be earning fees in those pools where there is a lot of trading going on. So, you should try and provide liquidity to those pairs in which you think there will be a great deal of activity going forward. Do you foresee a project making an announcement that could drive a lot of activity in the next few weeks? Similarly, like I did in the above example, you'll want to factor the size of the liquidity pool. Larger pools with less trading volume are, holding all other factors equal, likely to be less profitable than where you make up a larger percentage of a smaller pool. So yes, try to be a bit more strategic with the pool that you dive into. One more neat thing that I want to show you on Uniswap is their analytics website. If you head on over to uniswap.info, then you can see an overview of the current market activity. As you can see here, the version 2 of Uniswap has only been live for a couple of days, and already we have over $10 million of total liquidity on the platform. You can also see the total volume is up to $1 million a day. Now, that may not seem like a lot, but you have to remember that version 2 has only been live for a few days, and the bulk of the volume is still taking place on version 1. This is because many of the liquidity pools created on version 1 of the dApp are still active. So, hopping on over to their version 1 analytics, you can see that we have over $6.2 million in transactions and total liquidity of over $32 million. So, combined you have over 43 million in both of the liquidity pools. Oh, and by the way, version 1 of Uniswap will still be fully functional for as long as Ethereum exists. It's just that over time, most of the pools will migrate over to version 2 and start using the updated protocol. One other thing that you may notice is that when you're trying to conduct a swap on Uniswap with version 2, it will sometimes pop up that a better rate is available on version 1. So you'll still have the option to use version 1 of the protocol if you have better liquidity over there. That covers the most basic features at Uniswap. But with the launch of version 2, some pretty slick functionality has been added. Functionality that the smart trader can use to their advantage to arbitrage markets. Firstly, a bit of a backstory to Uniswap 2.0. Earlier this year, the DeFi world faced a bit of a setback when some traders conducted what are called flash loan attacks. These were some pretty ingenious attacks that made use of vulnerabilities in smart contracts and pricing to bank hundreds of thousands of dollars. The exact mechanics of the attack are beyond the scope of this video. I've linked to the overview below, but it basically revolved around oracle manipulation. For those that don't know, oracles are the middleware that smart contracts rely on to reference off-chain data like crypto prices. So if someone is able to move prices and oracles feed these prices back into the protocols, they can manipulate the market. Anyways, attackers with zero capital outlay were able to borrow thousands of ETH, send them through a number of different DeFi applications, move prices, bank on the price move, repay the loan, and walk away rich, all in a single transaction. So, why am I telling you this? Well, with Uniswap version 2, their oracle design should be resistant to these type of flash loan attacks. They're basically looking to implement a time-weighted oracle service that could make it harder to shift prices in a short period. You can read more about its design in the updated white paper, but it seems to have got the nod of approval from the man, the legend, Vitalik himself. Anyways, so that is one of the updated features on Uniswap version 2. Another one of these was their flash swaps, which have similar functionality to flash loans. These allow users to borrow as many ERC20 tokens as they want with no upfront cost, then use these tokens to do whatever they want. This is all as long as at the end of the transaction they return the funds. Here is a pretty neat image that shows you how it works with flash swaps compared to without them. The real opportunity here is that in-between step where users can do whatever they want with the funds. So if you see that there's a mispricing on some other protocol and you want to take advantage or arbitrage out that mispricing, then you can do that. The only cost that you'll incur is when you send back the funds that you've borrowed. You'll need to swap them back into currency that you initially borrowed in and hence have to pay that 0.3% fee. But the point is you can bank a tidy arbitrage profit provided that you make more than 0.3% plus some gas fees. So, how do you take advantage of this? Well, the truth is that it does require some smart contract coding skills. You will have to import the flash swap code into your smart contract, then execute the code. I've linked to the docs below if you do want to dabble. It really is a fascinating feature. And it's not just a feature that allows people to bank risk-free profits, but it also leads to more efficient pricing in DeFi. Think back to how prices varied so much on the centralized exchanges a few years ago. This was because the crypto markets were not that efficient, and traders were not actively arbitraging out these mispricings. However, today they are super efficient, and any mispricings are taken out almost instantly by those with arbitrage algorithms. You can head on over right now to CMC and you'll see just how close the prices are between the various exchanges. So I do foresee similar things happening in the DeFi space. Right now it is a bit disjointed, but with tools like this from Uniswap we can quickly introduce razor-sharp efficiency. That does it for my Uniswap walkthrough and tutorial. I now want to leave you with a few final thoughts before I sign out. Firstly, I have to say that I'm a fan of this project. These guys built one of the most popular dApps on the market that is powering the DeFi sector forward. This was all done without an ICO or any of that jazz. I think this has come down to a number of factors. For example, you have that heck of a simple and super slick user interface. If you want to know how to operate a Web 3.0 wallet, then you can use Uniswap to swap tokens and provide liquidity. Then of course you have the expanded functionality of version 2, which gives us the tools to take advantage of exciting opportunities in the DeFi space. Indeed, one can see why Uniswap was able to raise that seed funding from Paradigm. Sophisticated investors back innovative projects. Oh, and by the way, Coinbase just chugged a whole bunch of USDC into Uniswap pools. Yep. Even Coinbase, one of the world's most noticeable centralized exchanges, sees the promise of Uniswap and DeFi in general. Well, that's it, team. Thanks for sticking in there. But what are your thoughts on Uniswap? Do you have any questions that you need to ask me? I'd love to hear your thoughts in the comments below. And finally, if you loved this video, then please share that love. Please smash up that like button and don't forget to subscribe. My video pipeline is just fuller than a Saudi oil tank, so don't miss out. I hope you guys enjoyed that video, but honestly, I have so much more that I want to share. Stuff that I couldn't really fit in this video, sadly. This is exactly why I've started a weekly newsletter. It's basically a compilation of all the interesting content that may have flown under your radar. News, reviews, analysis, and hot market tips. Wanna join? Well, don't delay. Just scoot on over to the description where you'll find a link to my sign-up form. There you can enter your email address, hit submit, and hey presto, you are a Coin Bureau insider. My next newsletter is being worked on as we speak, one you won't want to miss. See you next time, chaps.